This is the Scrap Metal Commodities, Recycling, and Economic Report by Ben Lee and Raleigh and Goldsboro Recycling, January 15, 2018. This is Ron Ostrowski reporting. Last week, commodity prices and economic reports were mixed. Looking at the left of this chart, U.S. steel production rose starting the year. The U.S. and global economy remains solid, so increases should continue. Oil rose about $3 a barrel to a multi-year high of $64.30. On good global demand and continued cuts by OPEC countries to drive higher prices. U.S. oil production fell slightly but remains near all-time highs and should increase with the higher oil prices. Iron ore rose $2.50 a metric ton to a multi-month high of $78.50 on solid global demands and as supply slowly ramps up. On the left of this chart, we see that scrap ferrous prices rose. Export prices remain strong and flows are picking up in scrap yards with higher prices. Despite prices more than double 2 years ago, many believe we will stay at these levels and the weaker dollar could put upward pressure on prices. Stainless 304 scrap remained near multi-year highs at 35.5 cents on the balance of supply and demand and little news. Copper fell a penny to $3.22 as supply and demand is balancing and on good global demand along with a weaker dollar. Copper is up about 5.5 cents this morning to $2.27. The 5-year chart shows copper remains a bit off the recent 4-year high on good global demand and a weak dollar. Copper inventories were slightly down, remaining near multi-year lows, putting upward pressure on prices. Aluminum rose a penny to $1, remaining near a more than 5-year high as global manufacturing remains strong in many industries. Aluminum inventories continue falling, hitting new about 8-year lows despite the increase in global production. Cardboard remained at $115, which is near the low hit in 2016. China import restrictions remain a major issue. The enormous rise in e-commerce is fueling cardboard demand, which could put upward pressure on prices. The U.S. dollar hit a new multi-year low, which increases the price of dollar-based commodities, lowers prices of U.S. products to export, but increases the prices of products we import. A lower U.S. dollar clearly helps and hurts different parts of the economy. China's exports slowed a bit in recent months, but an all-time high in December and in 2017. Exports grew 7.9% in 2017, which is the largest growth since 2013. Sadly, China's trade deficit with the U.S. hit a record high in 2017 to $276 billion. Inflation fell to 2.1% in December, amid a slowdown in fuel price increases, but core inflation, which takes out fuel and food, rose 0.3% to 1.8%, the highest in 11 months, with the prices of rent, healthcare, and autos all increasing. The key IBD-TIPP economic index rose to the highest level since March 2017, driven by believed economic improvement over the next 6 months, combined with a very positive personal financial outlook, but the index was dragged down by a negative feeling about federal economic policies. Wall Street's Dow Jones jumped 507 points to a record 25,803. The recent tax cut is having corporations increase their profit forecasts, which is driving the increases. Also, while late in the cycle, investors are flooding into the market, which is also driving increases. As always, feel free to call or email Greg with any questions, and we hope all have a safe and profitable week.